my role naturally fits into trying to push people to be more ambitious and then try and bring in people that can take care of that. And then it's just having confidence and trust in those people. And then if you don't have a confidence and trust in those people to do it, then you've got to kind of get on top of it and act pretty quickly.
This is The Summit by Fields at Ventures. I'm David Newns, and every week, my co-founder Dominic McGregor and I will be talking to inspirational leaders about their experiences as they strive towards their summit. Hi everyone, thanks for joining us today at The Summit. We're Fields at Ventures, and we're following the journeys of entrepreneurs and interesting people who are on their way to their summit. Maybe they've reached their summit on their way to their next summit. We're here today with Gareth, the co-founder of Delio, who is really disrupting the whole public and private market investment space. Thanks for joining us, Gareth.
Thanks for having me, appreciate it.
Interesting career path, started in corporate finance, now you're a tech entrepreneur. How did that all come about? What's about the journey?
Yeah, bit of a blur in the grand scheme of things, but I think I always had a bit of an interest in the technology industry, kind of an industry I grew up in. My old man had a business kind of manufacturing PCs when they were kind of these big boxes, kind of growing up, a little factory in South Wales. So I think that was kind of where I kind of saw the change in direction of the IT industry and the tech industry more broadly, how that was evolving. Always wanted to kind of do my own thing, but kind of realised there was probably felt like there were some boxes that I kind of needed to tick along the way. So I went off and did my university and then went into the corporate finance space, qualified as an accountant, and that was kind of where the genesis of Delio came from, really. So yeah.
So talk to me, what is Delio?
Well, genesis really was we recognised kind of the changing face of investors, people creating wealth. It's completely different to say 20 years ago, where 20 years ago it's that kind of smoking jacket pipe type stereotype. Today's generation of people creating wealth of more different walks of life and backgrounds, as we know. And it's all around what they're kind of interested in doing with their money after that, and typically that's geared around private markets, alternative investments. We started observing kind of what some of the larger banks are really doing to cater to that growing demand. And the answer wasn't really much at the time when we founded the business. We kind of recognised that they were the best place to do more for their clients in it, so started building the tools, the technology and the platform to enable them to offer alternative investments to their clients in a way that's kind of more efficient, effective and more robust from a risk perspective than it was during the days of kind of emails, PowerPoints, Excels and stuff like that. And so we've kind of got a SaaS model that we've digitized the end-to-end process, sell it as a SaaS business and have gone to market with that for the past 5-6 years now.
Fantastic. And you're based in Cardiff, the business, right?
Yeah, Cardiff is where I'm from, yeah.
Cool.
You can listen, you can hear
the twang.
It's not left you, has it?
Not quite. Not quite. Depends on what environment. It's not. It's we don't have the Welshiest of accent where I'm from, but either side of us, it gets notably stronger. So
I bet. So you've built a tech team there, have you? And yeah.
Yeah. So the team's about 90 people now. All our technology's in house. So we set the business up in 2015, 2016, and kind of I think the environment was pretty different to what it is now. The team is a little bit more kind of hybrid, remote, and dispersed up and down country, but it's still the majority of the HQ for the business is Cardiff, and then we've got offices in London, Switzerland, and people dotted around elsewhere in the world.
What was the landscape like in 2015, 2016 for hiring good people, for raising money for your own idea? It feels like a very long time ago.
Yeah, I think it's. I've always been quite a big advocate. I mean, it's two primary factors really for moving from Manchester back to Cardiff to set the business up. The one was kind of the practical reasons. I couldn't really maintain my corporate finance Manchester lifestyle and set up a business. That was probably factor one. Factor two, also I needed to move back with my parents. But then factor two was kind of wanting to build a true startup success story out of Cardiff, because there hasn't been a vast quantity of them. I think we kind of punch quite substantially below our weight when you look at comparable cities.
I think it's 2% of money goes into
it's
into Wales.
Yeah, every statistic looks pretty bad. I mean, there was a article this year that there had been kind of 8-point-something million of capital raised in Wales in Q1, and I think 6.3 of that was us. So there wasn't really much going on in terms of activity even now. But even then, I think it's improved a lot, and there's a lot of kind of positive momentum. But back in 2015, it was kind of really, really early stage. There was kind of limitations. If we just spent our whole time focused on Wales as our home market, and that was really going to grow the business, and I think we probably would have struggled. But we realised from the outset that our industry and our business opportunity was global. So we didn't, whilst Wales was a home, we were kind of out there at every opportunity on getting on planes, speaking to people wherever we could, and that kind of inevitably ended up meaning our kind of target investor base was much broader than just Wales, which I think was probably a good thing.
I actually think what you said there in terms of going back home with your parents is really, really humbling. And I think a lot of people in life don't like to move backwards to move forwards. And you left a corporate finance role, which for people that don't know is, quite a nice lifestyle.
Yep.
Talk me through that, because a lot of people can't do that. They can't go backwards.
Yeah. Yeah, I think I was 25 at the time, and obviously, it was a really great firm, and it was all going really well, and there's a really good kind of path progression, and the opportunity was great. But it kind of been always something I'd wanted to do. And again, it's always a combination of factors, but I think one of the factors was kind of naivety, and at that stage of my life that this couldn't go wrong. I didn't really see this as not working out. I was just kind of convinced we'd figure out how to do it. So it was kind of just going in a little bit like, yeah, this will work, don't worry about it type mindset, I think was a big driver. But I was also kind of, at the stage where I felt like if I didn't do it at that point of my life, then it probably, as the years I was going to get older, more commitments in life come around, it probably would have become more and more difficult to make that transition. And I always had in the back of my mind that when I came across the right opportunity, the right idea, that I was going to make that transition. So it wasn't like a super difficult decision, I don't think, at the time.
For you?
No.
For others?
Well, for me, it just didn't feel like a massive. It really didn't feel like a risk. I think that was probably just blissful ignorance. But as I did it, then I moved back in, and all my friends are still going out in Manchester. I'm sat in Wales with my mum and dad. It was probably that was probably a little bit more where it started kicking in. Maybe 3 months, thinking, how do we get this mobilised? What we do, because again, at that kind of age, you don't have massive amounts of wealth sat in your bank account ready to go to be invested in the company. You've got to figure it out with what you've got.
The idea of taking a lifestyle which you get accustomed to and ripping it up in a different city and going to sit back with your parents watching Ant and Dec Saturday Night Takeaway.
Pretty much, yeah.
So then, shift lanes and going to a different gear. I actually think that's hugely commendable. And not many people have the kind of belief in themselves to make that transition, to know that going backwards is actually to make a big step forward. So I think you should be giving yourself more credit than you are already for that.
Appreciate that. Yeah, no, it's I think it's it's great that I had parents who would actually even let me do that.
They like you.
I mean, yeah, exactly. They were pretty devastated when I did say what I was doing, but they didn't get my way. Yeah. So they were super supportive, and even still are now. Even just for little things. Right? So.
We all know business isn't a straight path. We know there's kind of moments, and this could even be 2 days next to each other. Days where you feel like things are clicking and they're working, and the next day it's like, oh, well, maybe not. Yeah. How do you manage that in terms of the growth of the business?
I think it's you always kind of learning as you go, and I think one of the first things I picked up on quite quickly was that when you first start it, again it's that ignorance and that naivety takes to the point of being very, very up when something good happens, and that could be even something simple as you're trying to sell into a bank and the bank responds to your email in the early days. It's really minor things in the grand scheme of things, but you get really excited, really happy about it, and then when something doesn't happen that you had planned out, or something goes a little bit differently, then you get kind of really low. So I think one of kind of the first things David, my business partner, and I figured out was kind of all around trying to try and stay as level as you can. So not celebrating the successes and dealing with the issues, but not going one or two ways, because if you're constantly up and down like that, then you're just going to drive yourself nuts, right? I think that was kind of one of the quick things we do. So now, the biggest thing could be blowing up in front of me now, and I tend to just say, oh, yeah, is what it is. You've got to just kind of learn to be pretty bulletproof when it comes to that. So I think that's probably something we try to tease out early on. A lot of people are looking to you for
the leader,
the answer, or is this a problem or is this not a problem? So even if it is a problem, you've probably got to imply that it's not a problem, because the more drama and issue that's caused, the more difficult it's going to be to solve the problem, right?
Yep.
So,
a lot of entrepreneurs we speak to, have had co-founders, and for them it's been a massively positive experience because they've shared the journey, the ups and the downs, a bit of this kind of leveling each other out. How's that been for you?
Yeah, definitely. I think it's very difficult. I speak to a few people who've done that kind of first-time founder, single founder journey, and you are very much, you're always an island when find a business, whether you've got a co-founder or not, I feel like, but you're very much an island if it's just you, and there's never going to be anyone there to really have that similar point of view or that similar kind of passion. So I think that was super valuable. And I'm also kind of, acutely aware of, what I'm good at and what I'm not. So I think if you've got someone there as a co-founder and a partner who can make up for your weaknesses, then it really does strengthen the overall ability to make the business a success. You see scenarios where it doesn't work so well, but it's often when the teams are quite similar by nature and they're missing a piece, and then neither of them can kind of accommodate for that missing piece. But I think that's been a big help, because there's a lot of we've always had the same vision for the business. So that's actually the conversation of what we're going to do with the business hasn't really changed since inception of the business. We still, to this day, are sticking to a very similar strategy, just execute a little bit differently. There's obviously different views in terms of how we get there, but that's always pretty healthy, right? So,
has there been any major pivots? Like, you started in your mum's house with an idea. Like, did you execute the exact idea? Has there been any major pivots?
I think like the idea was, we did, our first kind of big milestone for the business was kind of like 8-9 months in. So Dave stayed in his job for another year or so and funded me a bit out of that. But kind of the first break for us was we got onto this accelerator program that was London based. It was kind of, at the time, there was kind of Techstars and Startup Bootcamp were the two main ones. We got on Startup Bootcamp Fintech, and we were like the earliest stage business on there. And we turned up at like the pitching ceremony the pitching weekend with like people we just roped in as ringers to pretend they were part of the team to make the team look bigger and stuff like that. And that was we managed to get on the program, and that was kind of where we first really got to look at the business model and what we were doing. So I think actually once we had that session and made a couple of decisions around what we are and what we're not, probably that core business model of being, doing the picks and shovels, delivering all the tech and tooling for the industry because it's under digitalized, and then looking at how we plug it all together and be the infrastructure, that stayed pretty standard. I still think that's the path. We've obviously added in lots of different things, and the product's gone, very different to what we initially had. We put together this initial business plan, which had this drawing of what the platform was going to look like, and it looks nothing like. So there has been a very different meander to where we're getting to, but I think actually the end goal is still stayed fairly on track. I'd say about 75-80% actually.
And that end goal, the kind of, I guess probably the mountaintop you're aiming for.
The objective kind of is to, was always to build like a, startup success story in Wales, and I think that's still a positive impact, the more tangible impact, most tangible thing I can do in terms of impact on the startup ecosystem there locally from where I am. The mindset around how far we take Delio is kind of, we'll keep shooting for the big outcome and the big goal, and if we fall short of that, we've still done okay. So it's a super interesting market. There's a lot of people scratch their heads around what we do, so it could, it's very difficult to predict what's going to happen in 6-12 months, let alone kind of 2-3 years. It's still up in the air, and then obviously you get, you start to get to the point when you get to the first time founder, when you've got 100 people, then there's going to be a plan to get to another funding round, 250 people, whatever. At what point am I going to be out of my depth? What point are we all going to be out of our depth? So there's always those kind of considerations, but I think there's there's still so much to do in that industry. I think it would have to be pretty off the charts to convince us otherwise of that at the moment.
As you've been building in different phases of the business, a lot of founders talk to us about the different skills needed in different phases, different management teams, what your leadership team looks like, in year 1, 2 versus 5, 6. How have you managed that? Are they the same people? Have they kept up with the growth or not? Have you had to bring different people in? How have you found that?
I think that's probably one of the biggest challenges in running the business, because I think because of the route that the organisation structure takes, because how we've always tried to approach hiring is, in the early days definitely, and even still try and maintain it as a cultural aspect today, but it's around finding good people that fit into what the company's trying to do, what they're trying to achieve, are going to come in and be able to have all those traits that you need, and then the roles will find them, and then where there's gaps there, you fill around that. So we've always tried to hire on a people first principle rather than like a role first principle, which helps them because you probably get more diverse people that are more adaptable to different scenarios and situations. So if you do need to change the org chart, they're not going to get as upset about it perhaps as someone who's been brought in and said, this is my job description, this is what I've been told to execute on. I'm not sure they're as built for the change and the constant changes of direction that you're going to have. There's been some tricky conversations. We've made a few bit of a mess in a couple of areas over the years, but I think in terms of this funding round we just closed right now, it's just given us a good opportunity to really kind of strengthen the bench around leadership, and so we're trying to get away from that idea of it being a small portion of the people shouldering a large portion of the load, because that's obviously not scalable. So there's certain teams that I think we're really well established now with leadership, and it just runs. I don't even need to do anything or be involved. And there's others that need a bit more kind of focus, attention, but we know where they are, we're rectifying it, and I think over time we'll be in a good place. And then it's just around making sure you can keep those people that are doing a cracking job happy, and that's a different story, right? So
make it sound so easy.
Yeah.
That is a blueprint.
Yeah.
I'm convinced. It's like, I completely know what you mean.
Simple, yeah.
A lot of people talk about personal sacrifice. So if you really decided to disrupt industry, you're trying to aim for something big, do something really meaningful, there's always a cost to that normally. Sometimes you don't know that till much later, and you look back and you go, oh my gosh, that was a big cost. Have you seen that? Do you know, for you personally?
For me personally, yeah, at the time, even leaving Manchester at the time was felt like a big sacrifice, because we had a great time up there, and I was really enjoying myself, right? And that was a lot to do in the early stages, and I think I was doing a lot of just getting on a plane here, there, and anywhere. Like anyone that would talk to us about private markets, my theory was, if anyone was thinking, any of these big banks anywhere in the world were thinking about doing something, and we've got a whiff of being able to do it, then they need to know we at least exist. So we would jump on fly overnight to Bahrain, get changed in airport toilets, do all that, and it was just but then I was still trying to maintain being social, going out with my friends. I was still trying to maintain going to the gym, being active and stuff like that. So I was just absolutely hammering myself. I was getting back from a flight at 2 a.m, driving back to Wales, 5 a.m, trying to go training at 6 a.m. with a friend. It's stuff like that. I look back on it. So there's probably a lot of damage to myself in those kind of years. And I think as well, I just completely shut out anything kind of relationship driven or like that. Something's got to give when you're in that kind of mode and mentality. It's just not sustainable. I think then you get to a point where you start, I don't think it gets any easier as the company gets bigger, but I think you become a bit more mature and a bit more able to think about more than one thing. I think especially as guy in middle of your 20s, you usually pretty much can't really overcomplicate things, can you? Being a bit stereotypical, but I was probably quite simple. I was work, gym, it was so adding something else was going to blow my mind at that point.
So as a leader, you talked about, are you going to stay ahead of this and keep up with the business essentially? Yeah. How do you do that today? How do you make sure you are keeping up with the business growth and not holding it back?
Yeah, I think it's, I've always super ambitious. I'm always trying to think about what's, what the next thing we could do, and some call it looking at the next shiny thing, right? But very much kind of focused on how do we grow, how do we build, speaking to those that are one step ahead of us, whether that's future strategic partners, future investors, future customers, making sure we're speaking to them even if we're not quite ready to be there. And then I think in terms of making sure that I'm not getting in the way of growth is actually just trying to, I'm more there, my role naturally fits into trying to push people to be more ambitious and try and bring in people that can take care of that. And then it's just having confidence and trust in those people. And then if you don't have the confidence and trust in those people to do it, then you've got to kind of get on top of it and act pretty quickly.
We've been having a lot of discussions around private markets. Obviously it's what we do. Yeah. Our vision here is to find profitable private companies and support scaling them by investing capital and support. How have you seen the kind of macro ambition between private and public play out over especially the last 6 months?
Yeah, even in the last 6 months particularly, it's just really kind of exploded, I think, as well. I think there's a couple of factors that have driven it. Obviously, you've got all your typical ones that they're talking about, where companies staying private for longer, blah, blah, blah. That's all, common fields. Then I think you've got kind of a couple of interesting trends, during COVID, a lot of those people, those wealth creators probably had more time to think about what else they could do with their money than ever before, right? I think, they didn't have to be as heavily reliant on just putting all their money into traditional asset allocations that can just sit there and be taken care of. They probably had time to think about, I can have a look at this, or I can have a look at that, I can read up on this, and I can read up on that. So I think that started to drive a bit more interest and engagement. The other bit and that's probably at the wealthier end, at the kind of the more retail mass affluent end, you've kind of got this whole democratization trend really taking, generating momentum. So the idea is that, well, if private markets are outperforming public markets, why can't I, as the day-to-day consumer, invest in those private markets? So, lots of things popping up, which is trying to looking to democratize. We get people coming in via the website all the time saying, we want to democratize this, we want to do this, and whether it's VC or PE or wine or cars, whatever it is, there's a real growing demand on that side as well. I'd definitely say overall it's client-driven, but then you also are having the financial institutions themselves thinking, well, we need to do, on that basis, if that's happening, we need to start doing things that are more interesting for our clients. So we're going to have to get involved. So they're inevitably being pushed forward as well, which is happy days for us.
Yeah, we talked about how archaic we find some institutes in terms of what they offer.
Yeah.
I remember speaking to a private bank for the first time and thinking that there's going to be this amazing club and it's going to be great and they're going to show opportunities and it's going to be this amazing community. And I was like, oh.
Fancy umbrella.
Yeah. I was like, okay, not naming any names.
No, it's a couple of challenges there from the private banking advisory perspective is a lot of our relationship managers will be concerned that they're going to lose that AUM if they start offering deals that they're not able to register. So that's the kind of on the banks themselves to find solutions for that. And then it's kind of, a lot of these propositions do exist within the bank, but a lot of the advisors don't know it exists. Like there's a couple of the banks where we knew that was a fact, like half the advisors weren't aware these propositions exist within the banks. They had these clients asking them for access to interesting stuff. They go say, yeah, I'll go look, and then just go away and not follow up on it and say, oh yeah, we couldn't find anything. So we heard all these anecdotes, and that was kind of, it's going back a few years now, but they're the kind of anecdotes that drove the
But the thing
opportunity.
is, if you increase your client's wealth, then your assets under management over time are going to increase, rather than stifling it by trying to get your lion's share day one from realization moments of change. We talk about entrepreneurs. It tends to be sleep at a one-bedroom flat in Camden until exit point, and then suddenly this exit happens, and oh my god, what am I going to do now? Because like as an entrepreneur, you're so focused on the day-to-day that the actual planning only happens until it happens, and then it's kind of like, okay, well, what am I going to do now? So it seems to be like a case of entrepreneurs, new wealth, I guess, is making money in different ways and making more money in single moments than they are over a kind of 30, 40, 50 year period. So of course they're going to go back to what they know. And they've got, and given social media now, there's great private networks created just through meeting people. And the banks they should be leading it, but they're not.
Should be, I think there's, the good ones are definitely looking at it as, private markets being a client engagement tool, a business development tool. Do you even need to necessarily have to monetize putting those deal flow in front of them? Not necessarily. There are ways now of actually keeping that as AUM by using like deal structures, so putting together nominees and SPVs. But it's all around that cross sell. It's, if you can go in and talk to a client about something that they're interested in talking about, then they're 10 times more likely to pick up the phone.
Exactly.
They're 10 times more likely to do the rest of the stuff with you.
Exactly.
It's interesting. You do see some, like, I've had a couple of different types of wealth managers get in touch, and they're kind of like recognizing exactly in that example where I'm not going to be putting loads of money with them at any point in the foreseeable, but hopefully at some point potentially, and they're there like, well, how can we help you with intros into our bank? How can I do this? How can I do that? And those are probably the ones that are going to be more, more competitive longer term.
Challenge mindset, isn't it? It's not, the new age of wealth managers and the up and coming banks who are trying to challenge the establishment, where they'll go, well, we'll do whatever we can to make sure the client's in the best position. And you've got maybe like any industry, traditional big boys who are sat there being like, well, we're so-and-so. So you'll work with us no matter what. We don't need to do anything for you.
Which is fine for the last generation, but for the generation coming down, they don't want to do that. Even if it's money being handed down, they want to be seen to be entrepreneurial. Maybe it's social impact that gets them interested. Maybe it's this that gets them interested. There's a lot more happening now than there was.
I think it's really interesting in the UK specifically, given you look at the FTSE 100 and basically the constituents are, oil, tobacco, a few CPG businesses, right? There's not really anything very exciting in the UK from a UK public perspective to invest in. The US is different. So I think the private markets in the UK, actually, there's a really interesting space there, I think.
Definitely. No, I think that's where, if you look in the US as well, you've got lots of, because there's so much going on in that pre-IPO tech space, like some of these marketplaces, like DC marketplaces that are launched in the US doing primary and secondary investments into some of these pre-IPO shares. They've got like massive amounts of demand, but not just massive amounts of demand from the US, it's also from the UK. So there's actually UK wealth going into these platforms elsewhere in the world. Asia Pac is the same kind of thing, and it's because those kind of opportunities aren't as accessible in the UK market.
And we're all still emotional, we all still want to, well, I am definitely, maybe it's probably the wrong idea of mine of an investor, but you do want to back things you started saying that you wanted to build a business in Wales because you wanted to success out from Cardiff. Maybe not the best business decision for a fintech business, but we are all emotional creatures, and we do believe that things we want to back things we believe in, and if we believe in this country, believe in people from similar backgrounds to us, let's give them the opportunity to do these things rather than having to take capital to just probably an unemotional decision into the US and just be like, okay, well, if I invest pre-IPO, I'm getting a 30% discount. So I 100% think that making capital easy to raise for people, giving people who have got capital the ability to access private deals where they can add value alongside capital is the way they have to go, because there is a lot of capital out there right now, and there's probably a surplus of good deals. So let's make sure that we can bring those two things closer together.
So what's next with Delio?
Well, we closed around kind of 3 or so months ago. So that was with Octopus, and that's been really really good start to life working with them actually. So enjoying that. It's nice. Just COVID wasn't a fun time for anyone, and obviously we were still moving forward, but not as some things got changed a little bit. So it's nice to be kind of in that position where we've got people in an office a couple of days a week, 5-6 people joining in a week again, and growing the team out pretty aggressively. So that's always nice, doing all the onboarding and stuff like that. Now it's about making sure that we deliver. Like the plan around the investment round feels pretty binary. Like we know what we need to build, we know what we need to hire, we know what we need to launch, and it's kind of around execution and not mucking that up. But I think if we do that, we're in a really, really good spot.
You sold the idea now.
Yeah, exactly. So we just want to make sure everyone understands across the business that what we do need to do. It's not just a case of you can just raise money and start high-fiving each other and that's success. We've actually got to deliver this thing called return, right? So
the attitude of raising money being the success is something which I think we can go on a long debate about that. We could probably do another podcast on that one. Thank you, Gareth, for coming on today. I hope you enjoyed that as much as we did.
Yeah, thanks for having me.
And if you enjoyed that podcast episode, let us know. Like, follow, share, and let us know anyone else you want to speak to. And if you've got any questions for Gareth, feel free to ask them and we'll get them to him.
Thank you.